You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike Tusaw from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again for the bi-weekly options extravaganza known as the Option Block, what the cool kids call the old OB. My name is Mark Longo. I will be your host, your guide, your leader on this perilous journey through the world of options. Of course, you guys know you can get all of our content, this show, everything else we do on the network on demand over there on just about every podcast platform under the sun. If you want to go live, you want to check out some of the other written content we have over there, theoptionsinsider.com. Then, of course, you want to go above and beyond, join us in the Secret Club, as well as, of course, get all the great pro Q&As, all the other great exclusive shows, the giveaways, all the other cool stuff. Theoptionsinsider.com/secret club is the place to go. And, of course, however you listen live after the fact, keep sending in those questions, those comments. We do love to hear from all of you folks out there. Let's see who we're hearing from on the old program today. First, I am pleased to say he is back in the rotation. He is the uncleest of Mikes, Mr. Uncle Mike Tusaw from St. Charles Wealth Management. Uncle Mike, welcome back to the program. To you, sir.
Always happy to be here. Great to be back on the old OB.
All right. Do you remember how to do it, sir? It's been almost a week now for you.
I'll do my best.
All right, we'll see if we could struggle through. Speaking of struggling through, we are also joined from the quiet hinterlands of Maine by the rockingest of lobsters, Mr. Andrew Giovinazzi. Easy for me to say, Mr. Andrew Giovinazzi. Let's see, of course, he's having a few technical issues. Let's see if we can hear him now. Mr. Rock Lobster, are you there, sir? Can you hear us?
I'm here, but I don't know if you can hear me.
Aha! I can hear you. Wow. Amazing what that's like. You sounded like you were coming to me through a tin can and string 1,000 miles away in another universe before.
Well, I have to say, as awesome as this mic is, the USB gets a little bit out of sync, and
that's it.
No sound.
It's power hungry, baby. Power hungry. You can't be playing tackle football in the same room as the microphone. How many times have I told you that?
Note to self.
All right. With the gang all assembled now and seemingly functional, let's head right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. Welcome to the old trading block, the portion of the show where we break down what the heck is trading, what is lighting things up out there. And it seemed like we were headed for a mixed session today. Not a heck of a lot of anything really going on. The NASDAQ off a bit, the S&P up a little bit, and Everything else kind of hanging out mixed or unched or up slightly. It seems like as the day has progressed, perhaps the market has digested this fact that it is, of course, St. Patrick's Day. So happy St. Patrick's Day to all of our listeners out there across the pond, here in Chicago, around the world, everywhere. We know St. Patrick's Day, kind of a universal holiday out there, especially here in Chicago. It's a big deal here. Everyone's Irish for a day here in Chicago. My little guy, his school, they had a piper out front when they dropped the kids off today. So that's always fun. But also from a market perspective, St. Patrick's Day is one of the most quote unquote green days of the year when it comes to the S&P 500. At least it's averaged up a little over a third of a percentage point on this day since 1950. So the market's clearly got wind of that, because as we're kicking off the show now, everything's turned to the green. Everything's up pretty much about 0.5%. Dow and S&P up about that level. NASDAQ a little bit of a laggard, up about 1/3%. But still, everything now trending in the green direction. That means, of course, vol coming in. We're still above that logins threshold, but we're starting to threaten that logins threshold, usually around a 25, where we're kicking things into the danger zone. We're at about 25 3/4 when we kicked off the show. That's down a little over 6 points, about 6 1/4 points from where we were on Monday's show. We had VVIX coming into showtime at about 113. That's down about 8 points from Monday's show as well. VXX kind of taking a while to come back to the dark side. It was only down a little over a point when we kicked off the show. It was at about 26.75. That was down about pretty much exactly a point out there. Of course, UVXY doesn't want to wait for long. Once those VIX futures start to ease their backwardation, that's it. Look out below. And UVXY was down 3 3/4. Was at a 16.75 when we were kicking off the show. It's actually down a little more now, down about 16.5. That puts it down 4 points from where it was on Monday's show. So yeah, catching up for a few weeks there where it didn't really do a lot of eroding to the downside. We've said it before. We'll say it again. Once those futures get juicy on the vol front, then look out for all those folks who want a lot of downside in UVXY, probably not getting it. And then when it goes away, you're going to get a whole bunch of it pretty much all at once. That's what we're seeing out there right now. And Vol Q, a.k.a. the at the money vol of the NASDAQ 100. By the way, the creator of Vol Q, our buddy, Mr. Scott Nations, a lot of you like him, going to be joining us in our Pro Q&A next Tuesday. So start getting your questions in about all things vol. He's got a new book coming out. He's going to want to talk about that, as well as, of course, all things Vol Q, NASDAQ vol versus S&P vol, to skew or not to skew when it comes to looking at volatility. So all sorts of fun things from a vol perspective. Start getting those questions in now. It's going to be a great Pro Q&A. If you're not part of the Secret Club, get on over there, join up. It's going to be a good one out there. Everyone has a good time whenever Scott joins us. But back to Vol Q. Vol Q is at about 27 1/4. When we kicked off the show, that puts it down almost 8 points, about 7 3/4 points from where it was on Monday's show. So a lot of vol coming off right now, even though it's interesting. We're seeing oil ease. We saw the Fed make its announcement. So that, of course, was keeping VIX a little bit elevated. Haven't seen much of a detente or really progress at all on the Ukraine front yet. It's not enough to derail what's going on out there in the markets today. Let's go back out now. Let's go the opposite of the way we came. Let's start in the land of Maine while the tech gods are still smiling upon us. Mr. Rock Lobster, sir, what is lighting up your tape in a day of green in more ways than one? Oh, no, I jinxed him. He is now gone.
Nope, that was the old problem.
Oh, that was you. I told you. I forgot what listener it was. Sent in that mute button for you. You got to go buy that, sir.
You know, I'm going to buy it just for this. So that's another mute button that I can not use.
Yes,
properly.
you can have two mute buttons.
Might as well just load the boat with all the stuff you cannot.
You can
use.
completely ignore as many mute buttons as possible.
I don't know if you've covered it this week, but didn't there's a little thing with VXX deciding to untether itself from its creation units during this week at the beginning of the week?
Oh, we have not. Yeah, we have not talked about it. If you want to catch our listeners up, yes.
Well, so you remember that we used to joke on the show that VXX was a reliably crappy product. In that it would at least do what it was supposed to do, which, because it's an exchange traded note, it's not an ETF. So it would create units in response to demand for product. Like if they needed bigger assets under, they needed more assets basically because they're buying a bunch of futures. And a product that famously stopped adding more creation units was TVEX. What was that, 6-7 years ago? I think, Mark, it was a while ago. And for a while, the product would trade about 100% or 95% above its net asset value, which means that the product itself is no longer responsive to the actual futures that it holds. I mean, there used to be variations in VXX, but it would kind of come back to earth during the day. And now that is not the case. So VXX had a 20 standard deviation move or something like that on, I think, Tuesday. Because of this, well, I think there's part squeeze, but also so today, UVXY is down about $0.50, something like that, and that's the 1.5 times product. And VXX is up 95 cents. And VIX is down 85 cents. The futures are down. So all the assets that VXX holds are actually down, and the product is up on the day. So this is the kind of thing that is not really cool, I think, because people are still trading VXX. It's clearly way over net asset value now and is due for some kind of a fall back to earth. And it essentially is not a functioning product anymore in my mind. I think savvy traders, that can, ride it out and wait for it to kind of fall back to earth. But the average person that's trading it thinking it's doing what it's supposed to do, it's not quite doing what it used to do. So I can't even call it reliably. I can't even call it reliably crappy anymore. Now it's just crappy because it won't even follow the assets that it's supposed to own. There's too big of a disparity. So I just why the SEC actually allows these things to be listed, and I'm kind of a laissez-faire market person, but the stuff like this, I just don't think is good for the market. If they're not going to generate the creation units they need to make sure the product tracks well, then why they should just delist it or go through a delisting process. So clearly they still want fees, but they don't want to do what they need to do to support the product. So, and I don't know, there's a lot of speculation on why they weren't doing it. Maybe because similar to SVXY and the Volpocalypse, but for the opposite reason, the assets are getting too big and they're worried about execution and liquidity risk. If we have some freaking, God forbid, anything bad happens, because we really haven't had a hot war like this in the West in quite a while. And I think that was part of it. That would be, again, just speculation on my part. So, and I think that's a bad thing for the market. So there's other products. There's VIXY, which I don't really look at because it's not very liquid, but the liquidity is catching up. And UVXY, which I don't normally look at because vol's, pretty high. And it doesn't really compound that well. But anyway, it's probably a better premium selling vehicle than anything. However, that's what we are. So again, a little grumpy on the vol product front. But overall, I would say, volatility is coming down quite a bit. It was 30 something when we did vol views last week, Mark. We were 35, 36.
It was in that range.
I can't even think. I was trying to think if we prognosticated lower for this week. I think we did.
You guys did. I was less low. You guys were in the mid 20s. If you wait, I can pull it up for you while you're talking.
Right. Yeah. I was I think I was in the mid 20s. But it's so we have the Fed comes out all right, now they're going to raise rates, probably a year too late, in my opinion, to be quite honest. And now we are looking at waiting for this, if there's going to ever be a ceasefire in Ukraine, so people can get their wheat and people can get their oil and the Russians can get McDonald's cheeseburgers again and life can be somewhat normal. But as of right now, still not happening. Still not happening.
Our chat has recommended, Mr. Rocklop, that you get an intern to help you run your computer. Just solely for that purpose.
We used to call them clerks.
Yes. Now you need a clerk just to hang out in your office with you on the shores of Maine. Is there anyone within 100 miles you could summon to do this duty? That's what our chat
nobody
is
that wants
suggesting.
the job.
Yeah,
nobody that wants.
That's true. Hanging out with the Rock Lobster in a room all day. But you know what, Mr. Rock Lobster? Volatility product suspends its own rules mid-cycle. Stop me if we've heard this film before, right?
Yeah.
What the hell?
That's what was the hardest thing about the reliable. It was at least reliably crappy, and now they're doing it again. I'm like, so, what's UVXY going to do? Become a 1X product? Because 1.5 times. I need to bone up a little bit more on the rules on the ETN versus the ETF, because I think the ETF had a mandate to buy them, to roll have the asset in the trust. But I'm going to have to look again because now I knew that VXX did have the ability to basically not do what they were supposed to do. I just didn't think just that asset under management, like 500 or 600 million, is enough to kind of tip the apple cart. So I was surprised by that.
Yeah. And by the way, I did pull up your prognostication. You were at a 25.42 for this week. So not looking too bad, sir. I was a little bit higher. I'm at a 28.33. Of course, we all know that 24 hours is an eternity, and especially now in the vol market.
Oh, yeah.
Quite literally anything can happen.
Might as well be a year.
What's that? We're shelling a nuclear reactor again? Why not? It's 2022. Yeah. So you're looking pretty good right now, Mr. Rock Lobster. If the game were to end right now, you would be close to our margin of victory. So I guess take an early victory lap. If you've learned anything from doing that show for nearly a decade, it's take your victories early and often out there.
Exactly. At least I was somewhat in the ballpark.
Yes. You can always say that. It'll be on your tombstone. Hey, I was somewhere in the ballpark, says the Rock. And I couldn't figure out the mute button. All right. Yes. Let's go on out to the land now of the unclest of Mikes. I am pleased to say he is back from his hiatus on Monday. Mr. Uncle Mike, sir. Looks like we got a bit of an Uncle Mike type of day on our hands. What's catching your eye, sir?
Well, we had this thing yesterday. The Fed announcement.
Never heard of it. What are you talking about?
I don't know. Yeah, so the market apparently liked what it heard on that. And so I think that for the time being, the market is, at least for now, digested the rate hikes are coming. And apparently the market was concerned that it might be more of a rate hike. And for the time being, it's happy with what it is. So that's where it's at along those lines right now. So for those of us bulls out there, yesterday was a very good day. One thing that I do want to share in what I did yesterday, and I shared it on Twitter actually, was that during this rally, typically with the markets as crazy as they are, as I've said on this show several times, I don't have a ton of deltas on the table at this point. I have an out of the money put spread that I'm still trading on the SPX and SPY. It's still out of the money. It's been at that same level since I rolled it down back in January. And so what I've been doing just to kind of protect myself, and I've talked about this on the show as well, is just been buying garbage over the weekend. The rally on Wednesday or yesterday gave me the opportunity to buy my weekend garbage early. And so my thought behind it is that I was still far enough out of the money to where I would have been comfortable during the week. But the fact that we rallied like we did yesterday, it gave me the opportunity to buy some weekend garbage that I typically have been buying on Fridays for like a penny in SPY anyway, or 10 cents in SPX, just something very insignificant based upon the credit of the longer term put spread. And I've just been buying weekend spreads at similar strike prices. And so with that rally, I was able to do it on Wednesday. And I was actually very calm going into the Fed announcement because of the fact that I had my weekend garbage in place on a Wednesday, and it was very nice. So the point is of what I'm trying to make on that, obviously I didn't need it because the market continued to go higher. But the point that I want to make is that there's very few people out there that are more bullish on the market than I am that are in the option trading world. And I still want to emphasize to all of our listeners out there that risk management needs to be a higher priority than market sentiment 100% of the time. And to me, seeing that rally, that was an amazing opportunity to put on some really cheap risk management, and I took advantage of it. So I'd like to emphasize that. And so the other thing that we're seeing right now in the marketplace, treasuries are kind of bottoming out where they were yesterday. So we're not getting any further selling. So I'm curious to see if all these rate hikes are factored into the 10-year note, or it's going to continue to go lower. We'll see where that's at. I'm continuing to eyeball things to try and squeeze as much short premium out of my 10-year note holdings as I possibly can. Silver's up a little bit on the day today. We're not quite at the 25 level to where we were about a week ago, but we are still higher. And so the other thing I'll be curious to see is if we do get some type of resolution for the Ukraine invasion, what does that mean for the precious metals? Because of the fact that we have a crazy world event, but we're not getting a major influx to the precious metals. Now, where the influx is going, of course, is to oil, which is where I will segue into right now with oil today, up 7% again, up at the 102 level. But keep in mind, that's down from 130. So we're kind of settling around that 100 level for now. And for now, I mean today. So we'll see where it actually can go, whether it goes higher or lower, but that is where it is at this stage of the game right now. The other thing with which to mention is that we are continuing our rally from yesterday. So that's something that's very good for those of us bulls out there. And the other thing that's actually leading this rally on the day today, in my humble opinion, is the energy sector, with XLE up nearly 3% on the day. There's a couple of sectors that are up a little bit, but for the most part, where this rally's coming from on the day is the slippery stuff. And that is what I'm seeing, Mr. Mark.
I'm seeing a lot of requests for a makeup strategy block here because you missed Monday, Uncle Mike. So you're getting a lot of love. So spoiler alert, listeners, yes, you are going to get a strategy block a little bit later in the show today. Makeup one. So hold your horses. We'll get there in a second. First, let's get around the horn here to see what we're looking at from an overall markets perspective right now. And you know, it's a green day on the street. That means a red day for VIX. That usually doesn't translate to a ton of paper, but today we are seeing an exception to that. 435,000 contracts on the tape already right now. This usually equates to a day when we're off, 1.5%, 2%, and vol is popping. That's when we see this kind of volume out there in VIX land. Let's just see really quickly if I can see what is going up out there today that is causing all the action. It's the June 23 puts have gone up 51,000 times already. And then the May 35s have gone up 31,000 times today. So interesting. Maybe a 1x2 because there's a June 27 puts have gone up 25,000 times. So 27, 23, 1x2 put spread. That could be. Either way, that's 75,000 contracts right there. So there's some paper afoot. Actually, it looks like that's exactly what it is. It's the 27, 23, 1x2 put spread. 25 by 50,000 times went up this morning. Okay. Interesting. Looks like paper selling one and buying two. So trying to get that explosion to the downside. We always talk about 1x2s to the upside in VIX, right? So these days, we don't always do the downside for a lot of reasons. There's a lot less room for it to explode than there is to the upside, obviously. And usually when we're talking about these, VIX is probably in the mid to high teens, so even less room to run. But right now, when we were starting at a starting point of around 30, you got a little bit of room to the downside, and someone's expecting a nice downside explosion past the 23 strike by June. Interesting. What do you think about that one, listeners? Looks like they did the 27 puts for 437, and they did the 23 puts two times for $1.90. So interesting stuff. Looks like they did it for like about 57 cents or so. So intriguing stuff here in the land of VIX. And that's just putting up all these numbers out here. SPY at about 3.16 million right now. The ADV 7.15. By the way, the VIX ADV back down below 600K, back to 594 right now. SPX kind of shrugging the shoulders. Only 792,000 contracts on the tape. That's not nothing, but it's not blowing the doors off either. The ADV is 1.7 million. And small caps having a bit of some paper today as well. Almost 500,000 contracts, about 470,000 contracts on the tape right now for IWM. That ADV has also come back down to about 780, come back down to earth a bit. It was north of 1 million for a while. That's typically unsustainable for IWM over the long term. So 470 on a day when the ADV is 780, that's nothing to sneeze at. If you want more small caps in your life, just stay tuned, listeners. We'll be back in exactly an hour for TWIFO coming up a little bit later today. And guess what? our favorite friend who's on spring break, the once and future and now present Dr. Vix. He is taking advantage of that spring break. He's trying to get on every show we possibly have. We've had to limit him. He was on Vol Views last week. He came on Oddities last week. After that, he's going to be on Twifo with me in a little bit. So if you want to break down all the vol going on out there, not just in the equities, we're going to talk energy. There's a lot going on in energy, obviously, and a whole bunch of other things. A lot of vol to be found in the commodity space right now. Then stay tuned in the Secret Club. Just listen live. We'll pump some fun stuff in. We'll be back there. If you're listening after the fact, just hit next. And I'll be joined there by the once and future and now present Dr. Vix. Let's get on out to the top 10 most actives. And you know what? This is another day where if I looked at these numbers, outside of any other context, I would have said, not much of a day, really. 187,000 contracts is all it costs you to break into the top 10. That's Amazon. The Amazonians back on the radar now with some antitrust stuff, of course, still basking in the afterglow of the announcement of their stock split. Only good for 187,000 contracts, but today that's good enough for number 10. Number 9 is Microsoft, 189,000. Actually, they're the ones having some antitrust in Europe right now. Of course, any given day, any big tech name could have antitrust issues in Europe. That's kind of just the day that ends in Y these days. Microsoft, good for 189,000 contracts, and number 9. Number 8, haven't seen this one in our top 10 in quite some time. This is Occidental Petroleum, ticker symbol OXY, OXY. Trading right around 57 bucks right now, up about 410 or about 7.75% here. So Oxy getting a lift. Interesting, even though crude is having right now, spoiler alert, in the midst of its worst week since the start of the pandemic. So interesting that Oxy would be lighting it up out there today. Number 7 is NIO. It's a day that ends in Y. Got to have some electric vehicles in there. Today it's number 7, NIO, 245,000. Already at number 7. We're not even north of 250,000 yet, which is kind of interesting. Again, doesn't look like a rock'em sock'em robots day just from the top 10 here. Number 6, Facebook, 343,000 contracts. Let's see how Facebook is faring in these days of rally. Up about 1%. Let's go back over the last week here. So it's had a nice little pop. It got down to 186 and now is almost at 206. So a nice almost 20-point rally since the nadir there on Tuesday. And then we've got number 5. We got NVIDIA. So down a little bit. It's only number 5 today, not number 4. That gets for 447,000. Number 4 is Baba. That's what's taking the 4 spot right now. Good old Alibaba. Another day that ends in Y. Craziness coming out of China. Those markets under assault of late. Baba off another 5.5% today, back below the 100 level. Good for 452,000 contracts, though. Number 3, it's AMD, hanging out still. Number 3 spot, 514,000. Number 2, yes, I said number 2, is Apple, 624,000. And number 1 with a kind of a BB today is Tesla. Tesla managing to take the top spot with only 781,000 contracts. Tesla up a nice about 25 bucks or nearly 3%, right around the 864, almost 865 range. So still obviously well shy of the 1,000 level. When's the last time it was at 1,000? Let's see. Got to go back a ways. Late January. All right, let's keep on rolling here out to the land of earnings. Not a ton of earnings on the docket. As soon as we have the latest earnings move results, season, all that fun stuff updated for you, we will get it up over there at theoptionsinsider.com. But now it is time for us to keep on rolling, listeners. It is time to unleash the beast. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. It is time to get weird. It is time to get wild. It is time to get whimsical. It is time to actually look back on Mondays and Thursdays show. That's pretty much what we're doing. We didn't even rack some new ones for today because we have a lot to look back on that we just talked about recently because it was also near term. Including Monday's show. We had some weirdos on Monday's show first. Let's kick it off. Let's go back to, this was a newcomer on Monday, now making its second appearance on the show in as many sessions. This is Porch Group Inc. This was the one that tried to be the vertical software outlet or whatever for all things home. They've connected home, something along those lines. This is the holding company of, actually they're a subsidiary of Homeowners of America Holding Corp owns Porch Group. A lot of intertwined acronyms there. But trading right now, 765, off about 3.25% today. This one's had an interesting run. As you will recall on Monday, listeners, I was talking with the Meatball, and we didn't like this vertical that went up on Monday. It was a March vertical, so it's going out tomorrow pretty much. So it was a weekly play. Someone came in and scooped up the March 7.5, 10 vertical. And why didn't we like it? Were a couple of reasons. First off, they're paying a 191 vol for that 7.5 strike. The stock was $6.50 and this went up. So the stock was $1 out of the money. They bought this vertical. Clearly they were on to something. We'll get to that in a second. But they paid 20 cents. They lifted the offer for the Porch 7.5s. And then the part we really didn't like was that they turned around and dumped 5,000 of the 10 calls for a penny. I mean, if you're going to do this, at that point, the haircut be damned, whatever reason you would sell those for. Just, you're going to pay up for this vertical, keep that penny and just buy it. Let your thing run. If you're going to do this nonsense, at least just do it. What are you selling the 10s for a penny? So we didn't like any of that. But it seemed like someone was on to something here. Who knows? Perhaps maybe we need an Activision, Microsoft-style investigation here because they had some good timing. Now, let's see. I know there were no earnings in this. This was just a straight-up, as Barry Diller would say, good luck, good timing trade because the stock had a nice pop. Like I said, it was $6.50 when we talked about it on Monday. And then it's pretty much shot straight up from there. By yesterday, Wednesday, got up to, let's see, how high did it get? 791 yesterday. So not only did it rally over $1, it blew through this strike. So those calls they bought for 20 cents were trading around 41 cents. They were still trading 40 cents this morning. So this guy is looking pretty good, or gal, whoever it is out there. They had doubled their money. So they spent about $100,000. They made about $100,000. I say made in quotes there because these are still on and the stock is kind of coming back down now. Now it's down to 765. So obviously you do your options math, listeners, you know, there's only 15 cents worth of meat on that bone. So they're probably going to be trading a little bit shy of that 20 cent level now with only a day to go. So hopefully our friend got the heck out of Dodge quickly. As of this morning, he had not. These calls were still open. And I guess they were trying to ride them higher. Either way, they looks like they had not taken their opportunity to get rid of them for more than a doubler. Mr. Rock Lobster, what are your thoughts on all of this? On someone putting up this crazy vertical that was far out of the money when we talked about it on Monday, and then B, selling these ridiculous 10 calls for a penny, and then C, the fact that it worked out and they've done nothing yet. A lot to unpack there, sir.
So they sold some calls for a penny. They have not closed it, and we're still sitting here, and it expires tomorrow.
Well, they bought the 7.5, 10 call spread, but they sold the outer leg for a penny. Yes.
So I believe the phrase we used to have for that was I love my broker trade. So instead of just the broker can charge them for 2 legs instead of 1, so he can charge them to sell that leg for a penny. So somehow 19 cents was a whole lot more palatable than 20 for the trade.
Exactly. He was sitting there saying, I don't know if I want to do it for 20, but 19, I'm all over it. I'm here for it. I just want to know what calculus went into this decision because it just cracks me up on many levels.
So, I mean, but they're right. That's obviously, that's a good thing. And this is one of these, one of these little rinky-dink technology companies that was, $60 last year, and now it's down to $7. Would that be accurate? Let's see here if I guessed right. Oh, okay. I'm a little off. It was, let me see, 1 year. It traded as high as $26, and now it's down to $7. So it still lost a good 75% from the top. So something like that. So yeah, I think a lot of these little rinky-dink stocks are starting to make a little bounce here. So I'm glad they've made money, but selling calls, I mean, as a rule, I don't like selling anything for under 20 a quarter. In my mind, it depends how many contracts I have. Obviously, if I've got a bunch of contracts and I know there's no shot for them to be worth anything, I will hit the exit on them, But in this case, I just, why do you sell 5,000 pennies? I just don't get it.
By the way, I just checked. As of now, a whopping 19 of these have traded today. So he has not closed these. He's sitting on these things.
And, I think, and I think the stock had, I think earnings are not quite there yet as far as making any money. But I can see why they don't want to close them. Maybe they're trying to stretch the end of it, or they're expecting to take stock, right? Somewhere close to the bottom. So those are all reasonable things, I think. Reasonable things. Except for the penny.
Yeah, I don't know if the penny falls into the reasonable category. But yeah, he's still riding this, listener. So not sure what's afoot. They had some pretty suspicious timing on this. They were pretty well-informed, well-intentioned, whatever you want to say. We always say size money, not always the smart money, and certainly the upper leg of this, not the smart money. But the calls worked out, and yet they're still riding them. So we shall see if they ride this to oblivion. Maybe the regulator is getting a little bit more active after the whole Barry Diller thing. Maybe stepping in, freezing some accounts that say, hey, you know what? That looks kind of suspicious. Either way, this one is intriguing. So it seems like right now, as of this morning, he had doubled his money. He was up about $100,000. At this point now, that's starting to come off, and I don't see any signs that he's taking it off. So he may be back down to unched before we know it here. Let's go to another weird trade we talked about on Monday. This last week has been full of crazy March trades. We went to another newcomer. This was AZEK Company, ticker symbol AZEK. And let's see, I'm not going to do the whole year rundown because we got to get to it, and we did it on Monday. But at the time on Monday, we talked about the March 25s going up 3,375 times for a whopping 50 cents. They lifted the offer on these as well. It was an 85 vol. The stock was shy of 24 when they put these up, 23.91. So they needed a pretty aggressive run in the stock for these bad boys to work out as well. There are no earnings. Next earnings are in May 5th. But looks like they crushed it on this one as well. They could have both just gotten lucky with some very obviously high beta names here because the market did rally since we talked about these trades as well. So they could have got caught up in the wave of euphoria. But looks like they crushed it on these as well. This stock... like I said, it was $23.91 on Monday. That was almost the low. Got down to $23.58 that same session. And then it's pretty much done nothing but shoot up ever since. Got up to $27.38 yesterday before giving some back up. Went back down to $26 yesterday. Then rallied again today up to about $27.80. That seems like that was the high for today. $27.83, actually. So these are pretty much at the high for the week right now. So these calls you bought for 50 cents are now nearly $3 to the good. So he was crushing it. But it looks like, unlike our other friend, he started taking some off yesterday for around $1.80 to $2. It looks like roughly half of them were closed. There are about 2,500 still open. Weirdly enough, a lot of the prints yesterday were buys. Looked like they were lifting offers, but we know they bought these on Monday. But they have these coming in as closing yesterday. So that's kind of weird. Maybe I'll talk to the flow master about that. Sometimes we see some weirdness behind the scenes with different market makers taking other sides, and that impacts the opening and closing there. But weird stuff afoot. Someone could have piled in to buy more yesterday, but either way, the OI is down. So it looks like I'm going to go out on a limb and say they probably got smart and took some of these off for around the $2 level. And they bought them for 50 cents. You can't argue with the 4-banger. That's not bad. Mr. Rock Lobster. Looks like another guy getting a little bit lucky here with his upside crazy call buy for March. But this time, he actually took some off, sir. What say you?
Yeah, I think obviously, the stocks traded almost $28. So that was a pretty good little run they picked. Looks like the paper was kind of betting on a little bounce after the Fed, a little post-Fed bounce. And AZEK makes actually really good products. They're deck boards, and I think I think they do like a siding too, like a press board siding.
Of course, you would know what this name is. Of course, you would.
Yes.
The diehard woodworker that you are.
Yes, this is for exterior, like you frame your house and then you wrap it up in AZEK stuff. Very, especially if you live in Maine or a place where the elements are rough. We're Chicago. So yeah, and wow. And what's funny is I guess they had the home building boom. It pushed this up to kind of lofty prices. I see. For a building material company, trading at a pretty hefty multiple, and the stock is off 48. So off $20 from the highs. So like a good 35-40% from the highs. This actually doesn't look like a bad value play here. So I'm adding this just to a list to be watched. But again, with short-term options, like I generally don't keep them on if I have nothing to lose, and you maybe look, but it's such a coin flip here with a day or two left. But they look in the money, and it looks like the stock's going to kind of make a little run here too. So, but it was total home run of a trade.
So what you're telling me, if I can read between the lines here, then, is that it was you buying these 25 calls. That was you. Sounds like.
I just added it to my list of stocks to watch.
Stocks to watch.
Put it that way.
For the Rock Lobster. There you go. He's loving some AZEC. We had no idea what the hell it was on Monday. That shows the level of home building that Mark and I do. The show.
I'm going to guess very little.
Very little.
Mark got himself a beautiful home in Texas built. It's like, you buy a house in Austin, new construction. It's like a freaking palace, They're so big.
That's what you do. You pay others to build it. You don't build it yourself, sir. That's the whole point. That's what you do out there.
Oh, speaking for somebody who lives in downtown Chicago,
yes,
in the bunker building.
Exactly. I live in a van down by the river. All right, let's keep on rolling here. Let's do a quick twofer here because we got to get to Mr. Tusaw as well. But Mr. Rock Lobster, on the show last week, as you will recall, we were talking about, it seemed like someone, probably the same guy, because these trades were eerily similar. Someone was really concerned about the bottom just falling out in the financials. In particular, it was Credit Suisse and Deutsche Bank. We saw two very similar trades go up last Thursday on the show. Someone came in and bought all of the March 7 puts in Credit Suisse first. The stock at the time was $7.46. They came in and scooped 12,956 of them for 20 cents. That was a 91 vol. Then they bought 10,000 more for, actually a minute before, they bought 10,000 for 19 cents. Then they bought the 13,000 for 20 cents. Then they kept coming, 5,000 for 25, and 4,600 more for 20 cents, blah, blah, blah. All the way, total of 53,000 of these freaking things traded on the day. So clearly people were concerned about this. I think I noticed some other analysis after that show about how Credit Suisse had roughly $2 billion worth of default risk tied to Russian credit. So as we kind of presumed on the show, it probably was some CDS writers out there who were maybe coming in to hedge that apocalyptic downside. They were very worried about a default coming. Of course, that was all the talk, too, about the ruble madness, having to pay their debt in rubles, which would be a default, even though I do believe they get a 30-day grace period on that out there. But either way, someone was worried about the bottom falling out of bed in Credit Suisse. And we saw the same thing going up in Deutsche Bank around the same time. First, about 3,000 of the 10-half puts for about 50 cents, then another 3,000 for 53.5 cents. These were all vols in the 90s as well. Total of 20,000 of those went up all about the same time, right around the 9:30, 9:40 time frame yesterday. So clearly related paper in these. And Mr. Rock Lobster, I am now here to officially report to you that the bottom did not fall out of these names. In fact, completely the opposite. Right now, Credit Suisse is hanging out north of $8. And it had quite the rally this week. It got up to, looks like this is actually $8 is about the high. So we're hanging out at about the high for the week, but certainly has not fallen below the 7 handle, let alone the 7.5 handle where it was when we started talking about it here. So not only has it not blown through the 7 strike, it has rallied in the other direction. So we've got, 53,000 options. Just on the prints we talked about on the show last week, they dropped close to $500,000, about $450,000. Again, they had to average some of those prices. They bought them at all over the place. If you add up all the paper on the day, which some of it could have been back and forth, but if we assume all of it was this same person gobbling these up, then that's over $1 million that they threw away on pretty far out of the money puts right now, at least. And on Deutsche Bank, we have the same deal. Deutsche Bank is right now, it was trading 1074 on our show, listeners. It is trading right now $12.19. So this thing has run for $1.50 since, or let's see, the high was $12.24 yesterday, which was pretty much exactly $1.50. It's kind of hovered about around that level since then. So yeah, this thing is, both of them have kind of exploded to the upside. So they threw away, looks like about $1 million on those puts as well. So yeah, about 50 cents, 20,000 times. So my goodness, Mr. Rock Lobster, these folks were cataclysmically wrong, but I got a feeling they're not too worried about it though, sir. What do you think? They're either stockholders or they were worried about default. Either way, they're probably happy.
Well, what's hard to believe is that, you remember that guy last year, Bill Wang, with a discovery in January, February? like they own Discovery and Viacom, and he drove those stocks up, and he cost all those banks $20 billion.
Yes.
So you're telling me that Credit Suisse, one of the larger, let's call it shenanigan banks in Europe, they only have $2 billion of exposure to all of Russian default risk?
That did seem low to me, that number.
That just boggles my mind right there. That sounds like the biggest bunch of crap ever. Anyway, but I thought this was a pretty decent follow on these. They're buying the puts. However, like a lot of this stuff, don't know if they bought stock or if they were buying stock. And if you bought puts against this on a delta neutral, actually you'd be up money. So just goes to show listeners, when the market's doing goofy things, vol's high doesn't mean the gamma is underpriced. So that would have ended up making us a win. But as of right now, the puts are looking like Palookaville, at least going into this week.
It's not looking like Palookaville, though, listeners. It's the strategy block. Ask and you shall receive. So let's get to it.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody. Welcome to the block of Strategery. This is usually where Uncle Mike holds court on Monday. But Uncle Mike, who knew your segment was so beloved and so missed that we have to squeeze it in on Mail Block Thursday, sir? Does that give you a warm fuzzy in your heart, sir?
It does. And all of our listeners give me warm fuzzies in my heart because this is the best show in all of options.
Except for that one guy. You know who you are. I'm not going to name names.
There you go. So what I want to talk about today is time frame selection for a covered call. And so oftentimes you wonder, should I sell a 1 week call, a 1 month call, a 2 month call, or whatever the case may be? And I want to give you some thoughts, or give the audience some thoughts on how to make that decision. Step one, what's your sentiment on the stock? And is your sentiment on the stock, is it 1 week, 1 month, 1 year, whatever the case may be? And let's just say for right now, it's a 6 month stock sentiment. You're bullish neutral for about 6 months on XYZ stock. And by bullish neutral, meaning you think the stock could go up a little bit, but you think it's not going to move that much. And you think you can make some money selling some calls against it. So how do you make the decision? Should you just sell 1 6 month call, or should you sell 6 1 month calls, month in, month out, or whatever time frame you want? Well, first off, let's just decide, why would we consider selling a 6 month call on the stock itself? Well, the first reason is that that's where you're going to get the most initial guaranteed premium, meaning that you're going to get the most juice, so to speak, if the stock were to go to zero by going 6 months out, or if the stock were to go down 50%, 20%, whatever the case may be. And that's where you would actually have the safest dollar amount risk, would be going out 6 months. Now, what would be the other reason if you wanted to go out 6 months on your 6 month stock time sentiment? Well, the other reason is that perhaps you're bearish on implied volatility. You believe that option prices are going to go lower over the course of the next 6 months. And if you're selling 1 month options, that price that you get the first month might not be there the second month. And that's if you have a bearish sentiment on implied volatility or the pricing of options itself. So those are two reasons why you'd consider going more long-term in your covered call trading approach. Now, what reasons would you have for going more short-term? Well, let's say that you're just really neutral on the stock. You think the stock's really not going to go that much higher. It's going to sit there quite a bit. Well, if that's the case and implied volatility stays the same, you will make more money selling 6 1 month calls as opposed to 1 6 month call. And the reason is that a lot of time decay doesn't actually expire, or you'll actually have a lot of options holding on to their juice, so to speak, until the last month, week, day, whatever way you want to look at it. And so by doing that, if you just look at just about any option chart, you'll see, and you add up all of the 1 month options, they'll come out to being a greater amount than the 6 month option. So if you believe the stock is not going to move that much, that's definitely something with which to consider. Now, the other thing to think about, if you wanted to go 6 1 month calls, would be if you are actually bullish on implied volatility, but you still think the stock is going to stay roughly the same. In other words, you think there's going to be a lot more premium next month. So you're just going to sell a 1 month call. And then next month, because of some event that you see coming or whatever the case may be, you believe there's going to be more juice there in the 1 month calls a month from now. So that would be one reason to also sell shorter term options. And then the final reason that I would think to sell shorter term options is if you want to modify your time frame more. In other words, you want to have a little bit more flexibility. Remember, when you sell a covered call, you're obligated to sell that stock at the strike price with which you sold. So if you don't want to have that obligation for 6 solid months, maybe you want to be in a covered call for 1 month and then maybe be out for month 2, just have to just own the stock, and then month 3 and 4, sell a covered call again, and then month 5, just own the stock. That would be another reason with which to sell your 1 month calls versus 6 months calls. And that's just a quick overview of time frame selection for covered calls. If you'd like more information, check out my YouTube channel, type in St. Charles Wealth Management, and I just released a YouTube video on this exact subject on Monday. And that's the strategy block for today.
All right, listeners, let's keep on going. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show we tell you what we're watching for the rest of this week into the weekend. Really quickly, let's squeeze in a real quick little bit of mail block action to see what you folks are thinking on. Right now, we have a question that went live right before showtime. We'll get into it more on TWIFO, of course, but we asked you very simply, crude oil is in the headlines right now. If you had to buy an option on WTI right now that expired at the end of the year, when we started the show, WTI was right around, I believe, the 102 level, maybe a little bit shy of that now, but right around, let's say, the par level. If you had to buy a call, a 115 call that expired at the end of the year, or the 85 puts, what are you feeling for the end of the year? So far right now, 71% of you, again, it just went live a little while ago, 71% of you are saying the 85 put. You're seeing a lot more downside in WTI versus only about 30%, 29 change percent, saying you want the 115 call. Someone chiming in said he'd actually even buy the 85 put in August because crude oil goes down around the 4th of July week. Well, that's a good point out there. So we didn't even account for seasonality. We just wanted to go out to the end of the year. So if you guys have thoughts about that, that's going to be our question of the week, but a shorter one. It's only going to last about a day or so. So if you're listening after the fact on the podcast, you will have time to chime in. If you're listening right now in the live or however else you get in the show, then of course get on over to @options. Make your voice heard out there. But now let's go around the horn and see what everyone's chiming in about. By the way, I think I paid this off. If not, I'm going to do it again really quickly. Our question of the week last week was this whole Ukraine Fed thing kicking up vol. Do you think it's going to last? Where do you think we're going to close from a VIX perspective at the end of the month? And about 37% of you said north of 35. So you're feeling no resolution to this conflict anytime soon. About 28.6% said the 29 to 35 range. 23% said the 23 to roughly 29 range. And only about 11.4% said below 23. So about roughly a third of you choosing the under 29 levels in our polls, which is where we are right now. So interesting. So according to you folks, we are due for a turnaround in vol at any moment, certainly before the end of the month. Let's go around the horn. Let's go back to the land of Maine. Let's see if he can figure out his machinery there one last time. Mr. Rock Lobster, sir, what are you keeping an eye on for the rest of this week until the weekend, until we can gather here together on Monday, sir?
Obviously, we'd like this Ukrainian crisis to go past, and the exodus of money out of China and Chinese equity markets and capital markets in the last 2 weeks has been so stunning. I think it actually might have got Xi's attention. So he might be pressing his pal Vlad to make some kind of a deal soon. So that's pretty much the biggest thing. And the second thing would be, do we get out of the danger zone after pretty solid 3 or 4 weeks in it? So that is where I am focusing my attention currently.
Mr. Uncle Mike, same question for you, sir. What are you keeping an eye on until our next show on Monday?
I mean, just the news. That's the main thing that you got to watch right now. Technical levels, we're well in the S&P 500. We're well above where the scary levels are, so to speak. I mean, I've been watching 4,000 for a while. We just actually are right at the 4,400 mark right now, just with today's rally, right on it. We were over it for a second. So watching the news, I think that there's really nothing else to watch at this point in time. As much as I absolutely hate watching the news, I got to watch the news.
All right, everybody. That music means we've come to the end of another perilous journey to the world of options. Hopefully you all made it out the other side with us here on the show. By the way, our chat pointing out yesterday was 316 Stone Cold Day. It would have been a good day to have his music on the network. Yes, he is a 90s guy, but you're right. He is. I think he's actually coming back to WrestleMania now you mentioned that. So everything old is new again in the world of wrestling, especially when you have to sell 2 days worth of tickets instead of one. And suddenly, anyone people recognize is welcome at WrestleMania, even if they haven't wrestled in, 20 years. But I digress. Let's go back around the horn. Let's start with the unklest of mics. A, did you do anything special to celebrate Stone Cold Day? And B, where should folks go if they want to discuss all things wrestling with you, sir?
Didn't do anything to celebrate Stone Cold Day, and unfortunately, my daughter was sick, so we could not celebrate Pi Day on 3/14. But if they are looking to learn a little bit more about what I do as a financial advisor, feel free to check out my website, stcharleswealth.com. Give me a call. My information is on there, or feel free to follow me on Twitter at Mike Tucson. If you want to see more videos of strategies, the expanded strategy block, so to speak, check me out on YouTube. Type in St. Charles Wealth Management.
It's true. We did have a jam-packed week of holidays. We, of course, had Pi Day, Stone Cold Day, and now the least of the three, of course, St. Patrick's Day. All the Irish are hissing and booing right now as we speak. Let's go around the horn to the Rock Lobster. Mr. Rock Lobster, sir, if folks want to hit you up, they want to tell you that secret passcode, Mark Longo, the sexiest man in options. If they say that, what do they get?
They do get 10% off any product at Option Pit, anything we've got. So you could say, hey, Ted, I listen to Option Block or Vol Views or any of the shows, and I want 10% off, and Ted will give it to you, something for nothing, only here on the Option Insider Radio conglomerate.
Something for nothing, optionpit.com, the place to go to get that something for a whole bunch of nothing. And we got to get on out of here, but you know what? You're going to have a whole bunch of stuff pumped into the live stream in between, so just hang out there if you're listening after the fact. Just hit next. And I'll be back in a few minutes now with the once future and indeed present Dr. Vix to talk vol across the broad spectrum of commodities, not just equities. So it should be a fun time. We'll see you in there. Back again tomorrow, noon Central, 1 p.m. Eastern for Volatility Views, of course. And after that, for all you cool kids in the Secret Club. Yeah, I'm looking at you. I see you there, Option God. Welcome back. 2 days in a row there. But yes, all you Secret Club kids, Options Oddities tomorrow after Vol Views. And of course, we're back again next week, next Monday, another episode of the Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.